First of all, how's inflation going?
Well, look, we're coming out of a pretty historic 2-year inflation spike. When you look back for historic precedents, it's not till the 1970s, so literally a 50-year event. And the spiking is over, but you still see somewhat elevated inflation levels. It's too early to call deflation. And so after these 2 years, it's understandable that consumers have some trouble making ends meet. Yeah. There's caution out there. You also see that central banks have done what they're supposed to do, and that is fight inflation. And so that is now making its way into the real economy. You see mortgage rates going up. You see leases and rents going up. And so all of that adds up to a good deal of consumer caution.
But overall, Mark, how has Nestle actually changed under your watch? I don't know whether there's been more or less. For example, ad spend. I know you've readjusted also the focuses and the key markets you want to be in.
Yeah. So I think the key item over the last 5-6 years internally was cranking up the rate of innovation and clearly making sure that for an industry-leading R&D budget, we're getting a steady flow of new and exciting products, because that is ultimately what drives mix and what drives revenue growth from a real internal growth point of view. And then on the external side, we've done a lot of portfolio rotation, about 22% over 6 years. Deal volume of about 50 billion with good acquisition outcomes, but more remarkably also walking away from potentially 50 billion worth of deals when prices seem to be too high. So a good amount of deal discipline at the same time.
How much transformational deals do you think you'll do in the next 2 to 3 years? I know one of the big questions is, for example, margins in water, which is also, they're lower than the rest of the group and they're not that sustainable or climate friendly. Is that something that you'd get rid of?
Yeah. So we made it clear that the bolus of some of that portfolio rotation is done, but clearly on a large book of business that's approximating 100 billion Swiss francs, you constantly have some portfolio rotation. You're trading into very promising areas. And when you see longer-term limitations to a category, then you have to ask yourself the question, are you the best owner? Is it the best fit? And so specifically, I have no announcements to make today, but clearly, that process of evaluating opportunities either to grow or to divest will continue.
So I know geographically, for example, you've said in the past that you want to be very present in India.
Yeah.
Or can we expect something big in India because of consumer demands and actually the wealth of citizens is growing?
So India is a super exciting market. We even held a board meeting there last year to see on the ground all the dynamism. We're super impressed with the move towards digital. So clearly that to me is the biggest change from pre-COVID years to post-COVID years, how that economy has fully digitalized and taking all the benefits that come from that. So clearly we're growing there very consistently with above par growth rates. Would be very happy to build on that with additional acquisitions. But obviously we also have to look out for value and have to look out for valuations that make sense for us.
I mean, what do valuations look like right now? Again, because of inflation, I don't know whether it means that maybe in the next 6 to 8 months it's easier to find good deals, or whether it just makes it tricky because of all of the unknowns.
So generally from their peak in late 21, valuations have come down somewhat. But you see that some people, especially those who don't need cash immediately, are still holding out. And there's a hope that maybe the Goldilocks years will return. I think it takes a bit more time for the newer realism to sink in. And what you saw us do is act with quite a bit of caution here when it comes to deal-making activity in 22 and 23, and I think that was the right call.
Yeah, I mean, again, there's quite a lot of volatility. We touched on inflation. There's political upheaval. Like, overall, what do you worry about the most?
So clearly, it's going to be staying a very turbulent environment. We'll need to see how the economy continues and what that means for consumer sentiment, especially during the winter. And then also between the business strategies and geopolitical risks to be sure that we navigate in a way that we can live up to what we want, and that is stable, dependable growth.
So what are you optimistic about? Again, I don't know whether the holiday season in certainly the Northern Hemisphere is a good test of actually consumer robustness going into 2024.
Yeah. So what I'm most excited about is the fact that we have a portfolio now after a lot of adjustments that's geared for very dependable, successful growth. We've had lots of gyrations here due to COVID and in-home consumption, out-of-home consumption. And so looking beyond the short-term consumer caution, I think it's more important to see 24, 25, looking ahead, what are the underlying strengths here that this portfolio has to offer?
But again, so given the numbers that we have now, so what kind of trends will you see going forward? Now you have the health business, which is vitamins, and I don't know whether that takes a hit because of recession or that stays strong as people maybe go out less and take more care of themselves.
Yeah.
You also have a huge pet business.
Yeah. So pet continues to just steamroll ahead. So what we've seen there is a step up in pet adoption during the COVID years. It is not growing at double digit maybe anymore, but still, nonetheless, it's one of our highest growing categories, and it had 3 stellar years behind it and will continue to be one of our hallmark categories. On vitamins, minerals, and supplements, we did have a bit of a COVID or post-COVID hangover in 22. As you can imagine, during the COVID time, people were trying to boost their immune systems to the health, and now that had moderated somewhat. Yeah. That came to an end spring, summer, and then we saw demand coming up again. So there, going forward, we also expect very successful mid to high single-digit rates. Short term, we are marred by an integration issue that we called out to our investors in October. But once that is fixed, starting from 24, we should see that underlying growth coming through. So
were you able to actually increase prices and have higher margins? I imagine pet food is one of them, as people are willing to spend more for their pets.
Yeah. Okay. So we had to increase prices to reflect inflation on our input costs. As you know, it's also important for us to pay fair prices to our suppliers and the farmers in particular. But as you also know, our gross margin reduced a little bit because we were very much tuned into this idea of fair pricing and being sure that we're not fueling inflation. So whatever increases you're seeing in pet food are more due to meaningful innovation. So basically premiumizing the products. And this is one of the long-term growth drivers in the pet food industry.
Right. How much do you spend on innovation? Does the budget just keep on growing every year as you need to make sure that you're cutting edge at all times? Okay.
Yeah. So innovation is a key growth driver, and we have an industry-leading budget there of about 1.7 billion Swiss francs. Okay. And more importantly, making sure that translates then into short cycle times from concept to shelf and a steady flow in each category. That's important. I spent a lot of time with our head of R&D sampling products personally, spending time with the team, because clearly I want to be sure that they understand, everyone understands in their group, that their function is vital to ensuring future growth.
Okay, what's the most exciting thing you've tried? Or is that secret? The prototype.
The prototyping is always secret, but obviously we have very exciting developments underway when it comes to plant-based food. Coffee is a constant source of innovation. So there you see a never-ending expanding universe when it comes to new varieties and new trends. And then, as you mentioned, pet food is the other big one, where clearly consumers are yearning for premiumization, and we're happy to dish it up.
So, Mark, when it comes to plant-based food, this has been the trend for quite some time. I guess eating also less sugar, less, just being more healthy in general.
Yes.
Does that go up on a trend or up and down?
Look, I think short term you have ripples and you have fluctuations, especially now when it comes to purchasing power, when it comes to some of the COVID limitations and the inflation spike. Longer term, the trend towards more plant-based nutrition is unbroken, and I would not define it narrowly as a lookalike burger or a piece of chicken or something. It is more about dialing up plant-based proteins as a source of your nutrition. And there, across the full spectrum, at every price point in every location in the world, we have very exciting developments underway.
Talk to me a little bit about, we're talking about premium brands, about the fact that I guess you have to be careful at, making sure that you don't go up too much in prices because people can't afford it, but also this trend towards optimization and premiumization. Where do you see the strongest markets region by region?
So look, we're committed to brands at all price points and levels of affordability. So it's not like premiumization is exclusively taking over. But yes, over a 10, 15-year period, we have been quite successful in premiumizing some of our brands where consumers were open to that. And we see lots of runway for that going forward. Yeah. Clearly, the most advanced markets in the US, in Western Europe, and also in Asia are the ones that tend to be the front runners here. And then you see that around the globe, everyone is getting very interested. And of course, these days, through digital media, whatever is cool out in the West Coast or New York gets emulated elsewhere really, really fast.
But in terms of numbers or consumption, do you see a bit of softness in Europe, Central Europe, but also the UK?
I think the premium side usually holds up quite well. There's a bit of trading down. It's more like at the mid-range of midpoint of the price range, where you see now some people more trading down to either cheaper brands or the private label, or also there's a reluctance to consume in the first place. So we saw, for example, in the US, with the running out of some of the SNAP food benefits in Q2 and Q3, that led to some hesitance. Now, it's a one-time thing. It'll lap out of the system next summer, but those are some of the trends we're watching.
But so do you think that people tend to buy less but higher quality when interest rates go up, and therefore they feel a little bit squeezed?
Well, that may be one trend. And look, that may be a good thing, because generally our whole strategy is towards higher value, either nutritional value or premiumization, and be prepared for lower calorie future. So actually, that's something that's right up and backed up by our nutrition, health, and wellness strategy.
Mark, one of your main competitors was in a spot of trouble this week because of labeling of ESG products on recycling that, some of the regulators here was maybe not the case. How do you deal with potential greenwashing in your industry and at Nestle?
Yeah. So I think we've made some very early efforts to make sure we live up to our vision, and that is to have none of our packaging end up as landfill or littering out there. And we're making very, very steady progress when it comes to reducing the amount of virgin plastics and reducing the size of packaging in the first place, and also advancing design for recycling. These are very challenging technologies. The devil is in the detail, literally, especially in our industry, because for food-grade packaging, you're so much more limited on what you can do. And obviously, some things work, others don't. We try to communicate as truthfully as we can. We're super transparent. We're publishing lots of data points around our progress around this, and want to be sure that consumers do have good sources of information coming right from our company.
But how difficult, again, how difficult to get a handle on the supply chain? You have very long supply chains.
Yes.
And so something can always go wrong, or there could be a mislabeling or something that you're not quite aware happening.
Yeah. And look, this is a developing area, and I think what the public should take away is we're really sincere in our efforts here, and we've done this now for a number of years, and we're having good progress to report. Occasionally, some things don't work as fast as originally anticipated, and we're quite open about that. And occasionally, look, especially in a fluid situation with long and complicated supply chains, something may sort of change, and then obviously it's important that people trust us, and that they trust us being transparent about this and communicating the right things.
Right. I know there's always been quite a lot of speculation on what you do with the ice cream business or some other things that are IPO'd or spun off. Can we expect something of that magnitude in the next 12 months?
So clearly, we've had fantastic success with our ice cream joint venture called Inflationary, where we partnered with a private equity firm, and we've taken this now to one of the leading ice cream companies in the world, and very excited about it developing going forward. At this point, no announcement to make, but couldn't be happier with how this develops.
Yeah, given the trends that we've seen over the last, 4 to 5 years, which we've talked about, which is, more nutrition, watching what you eat, more plant-based, are tastes changing? How much focus do you put on trying to understand just physically how human behavior and human tastes will be in 3-4 years?
Well, obviously, this is a core area of our research. There's some general trends. There's also medical insights. And then, of course, there's lots of regional preferences. But one of the medical ones these days, of course, is the advent of GLP-1 drugs and what that means. Here, I see it's not so much a threat for us. It's more like a full-blown vindication of the strategy that we've been pursuing very patiently over the years. Take our high growth categories that are not impacted by GLP-1, pet care, coffee, and our Nestle Health Science business. That used to be 30% of our business in 2016. It is now about 50% of our business. So clearly, this is where portfolio rotation prepared us for this lower calorie, higher value future that we've been pursuing. So it's not impacting us.
I know a couple of years ago we talked a lot about some of the local players, for example, in India and others, like local brands that became massive that people preferred in certain emerging markets. Is that still the case? Again, is this one of a threat maybe that you're looking at?
Yeah. So we're seeing very successful local brands. We're seeing very successful global brands. And to me, it's not so much about local versus global. It's about strong versus weak. And so clearly, if a local brand is meaningful, we'll drive it. We have a stable of about 2,000 brands around the world. If A brand is global. Obviously, that is a core asset. We have more than 30 billion euro brands, and those are growing above par.